Hello everyone, this is Kathy Lien coming to you from the CME NYMEX floor. It was another exciting day in the foreign exchange market, and if you're not watching it, the currency that was really on the move was the Australian dollar. It rose to a fresh 3-month high and was the best performing currency today. There are a couple of reasons for that. First, the Australian economy is doing quite well. Data has been good. On the domestic front, both consumer and business confidence has been on the rise. And on the international front for Australia, we actually had pretty good Chinese trade numbers. Imports rose more than expected. Imports and exports were both healthy. But for Australia in particular, who basically live and die on Chinese demand, imports rose more than 17%, which is a very good number. So that kind of propels the Australian dollar higher. The market's also skeptical about Janet Yellen and the Federal Reserve. In day 2 of Janet Yellen's testimony, she finally acknowledged the improvements in the labor market, and she indicated that perhaps inflation is a two-sided risk. It could rise or it could fall. So we did see a little bit of U.S. dollar gains, but it wasn't enough. It wasn't enough because data still does not support the Federal Reserve's optimism and their hawkishness. And as a result, investors remain skeptical of U.S. dollars, particularly since on day 1 of her testimony. The real takeaway was that the Federal Reserve is observing inflation actually kind of easing rather than improving. So this makes it very important to focus on Friday's U.S. economic reports, because at the end of the day, what really drives currency flows for the most part is the market's demand for U.S. dollars. So on Friday, we have U.S. retail sales and consumer prices. While the absolute amount of job growth has been quite healthy, earnings has been a little softer. We also saw producer prices increase only slightly last month, and most importantly, gas prices have been falling. That's an important input into CPI. So if those numbers disappoint, we could see new highs in the Australian dollar. But what you have to be cognizant of is that Australia is very much an export-dependent economy, and as a result, they're very much sensitive to the level of the Australian dollar. So the RBA will be worried about where Aussie is right now, particularly since it's so much stronger than where it was when they last met in their monetary policy meeting. So if they were concerned, and they were back then, they're going to be even more concerned about the level of Aussie now. And in Australia, inflation still remains quite low, as it is around the world, and the recent rise in the Australian dollar only puts further pressure on that. So there are some reasons to be worried about Aussie strength in the long term, but in the shorter term, though, it's all about U.S. data, the U.S. dollar, and whether U.S. numbers are going to be good on Friday. And I'm kind of skeptical about whether that's going to happen or not, given the recent track record of U.S. data. So hopefully that's given you some insight into where the Australian dollar could be headed and some color on its recent moves. This is Kathy Lien. Thank you for joining me today.